Hi, everybody. Welcome to the channel. Today, we're going to be looking at the company Western Union. As many of you are probably aware, they provide money movement and payment services worldwide. The company has been around for more than 170 years, and for a little nostalgia reference, they had a small appearance at the end of Back to the Future 2, which gave a slight indication to how long they've been around for. So if you haven't seen the movie, definitely check out the original and the second. As for the stock, it has been showing metrics that I like to see in the company, but also I have some concerns. And I'm a little mixed if this is a value opportunity or a value trap. So first, we'll look at their financials, then move into the stock valuation, and then at the end, we'll go into the computer modeling to forecast the 52-week stock movement. So let's jump right into it. Looking at their financials right away, it is showing a little mixed. We can see here for revenue, they had some up years and down years. Most recently in 2022, it was slightly down. Same thing for net income. However, net income over the past 5 years has been trending upwards, except for 2020, which probably impacted by COVID. And that also impacted the last 5 years of earnings per share, where 2020 was also slightly down. But moving on to dividends and shares, one thing I like to see in a company that pays a dividend is that it's growing over time. And we can see it's been growing since 2014. So it's a nice data point I really look for. And same thing for share count. I like seeing companies that are buying back shares. And we can see here over the last 10 years, they've been doing that. Book value. Book value has been increasing over the past 5 years. Yes, it was negative back in 2018 and 2019, but shown growth over the past 3 years in a positive territory. Free cash flow. So this is something that I like seeing growing as well, but a little mixed, like revenue and net income. But over the last 5 years, three of them have been growing. Back in 2020, you can see over $1 billion in free cash flow, and last year was about half. So a little concerning, but it's kind of showing a upward trend. And looking at net profit margins over the last 5 years, we can see they've been averaging somewhere between 15 and 20%. Yes, 2017 was negative, 2016 was less than 5%, but then the 3 years before that, hovering around 15%. And then free cash flow to sales, averaging well over 10%, so many times over 15%. So these are data points I like seeing. And though when we looked above here, it was slightly mixed in areas. So I'm kind of torn between a value opportunity or a value trap with some of these metrics. And let's go a little lower to the graph here so we can see some of those data points a little easier. We can see in white, which is revenue per share, which has been growing back from 10 to 5 years ago, and then a little mix over the past couple of years. But in red here, book value per share, that's been growing since about 2017. As we discussed, earnings per share, that's been showing a slight uptick as well. So some data points here that is showing things moving to the top right, but not nearly as much as I would like, or not as a growth trajectory as I would like to see. I would like to see a little more of an incline here. So again, in that little mixed area for this stock or stock um, financial performance. So let's go a little lower and we'll actually look at the valuation for the stock. All right, so first here in this light green, this is the actual discounted cash flow calculations being performed. And we can see what's already entered here is a stock that has an intrinsic value of about $25.50 with a margin of safety of 70%. That comes down to $17.86. And I'm using a 0% growth rate over the next 8 years. So I'm going to be a lot more conservative than this. And I'm going to change that margin of safety down to 65%. I'm going to keep the growth rate at zero, but increase that zero growth rate for 10 years. See, and we can see from that, the intrinsic value drops to $24.90. And with a 65% margin of safety, I'm looking at a price of around $16.19, which matches the valuation I did back in March of this year. But I'm going to take this even a step further. Though we're using a 0% growth rate at 10%, My perpetuity growth rate thereon is 3%. So I'm going to change that to 0. So I'm going to show no more growth for Western Union ever to see what the valuation would be at that point. And that gives us $13.82 for a margin of safety intrinsic value. And currently, the stock's trading under $13 in a $12.60 range. So, considering no growth for the future of Western Union, it's still trading less than what I have as an intrinsic value with a margin of safety. But also, what like to look at are these data points here in blue, and the first one being this return on invested capital. We can see here averaging over 15%, and really over the last year, 3 years, and 5 years, over 20%. So this is a really good data point here. However, quite concerning with some of these other ones: book value growth, earnings per share growth, sales growth, and free cash flow per share. You can see mostly negative or very low, with a few exceptions like book value year over year, 41%, and earnings per share had a nice uptick last year, but many other negatives. So this is a little concerning. Also, though, their PE ratio is under 7, it's like 6.4, and their dividend yield is over 7%. So you can see pretty mixed. We have some very good data points, and then we have these data points here, like free cash flow per share declining, and sales growth declining uh, over all these years as well. So pretty mixed. And if I scroll down a little bit further, we can see here long-term debt to free cash flow, it's over 4%, and I really want to see less than 3. But moving on to dividends, so this is one of the good data points. It's grown 88%. I would have liked to seen it a little higher, but still, it's growing. Share count decreased 30%. So another good data point. And then over here, net profit margin for the last 10 years, averaging over 12%. In the last 3 years, over 17%. So throughout this whole evaluation, I've seen mixed results. Some very good ones, like I just mentioned, and then some concerning ones too, like their free cash flow that has been declining. So with that, I would have to hold off on investing in Western Union, wait out a couple more years, and hopefully they can still continue that uptrend that we saw in the graph that they've had in the past 3, 4, 5 years for some of those data points. And if I really wanted to invest in this stock, I would have to see this probably under $10, maybe even in a $8 to $9 range. But let's move on to the computer modeling to forecast the next 52-week stock movement, and maybe that will provide some positive outlook for the company's stock price. In the computer modeling software, I already ran the analysis using two methods, the M5 rule and random forest. And we can see here September 18th, the stock closed at $12.69. The column right next to it, this is just the S&P 500 ETF. These columns here are just some data points for Western Union. And now, looking out 52 weeks, it is showing that the stock is going to have a nice gain. And out in September of next year, it's forecasting a price just above $20 a share. So if this does happen, we'll have a nice gain for Western Union. But moving over to Random Forest, and same thing, starting September 18th, closing at that $12.69. And just scrolling down, it's showing more of a flat outlook over the next 52 weeks for the stock, and eventually closing just over $13. So a slight gain. Now, I like taking these two methods and averaging them out because M5 rule is usually a more bullish, while random forest is bearish. So I like taking the average and looking at that. So let's jump over back to Excel. You see, I already pasted the results from the computer modeling for the M5 and random forest. And now I'm going to jump over to the graph to get a better look at the forecast. Here we are looking at the M5 rule graph, and the vertical red line that represents Monday, September 18th, and the blue line is the stock price. So everything to the left is the historical stock price, and everything to the right is the forecasted. And the y-axis on the left That's just the dollar value of the stock, while the y-axis on the right is the percent change. So the orange line is the percent change over the next 52 weeks for our forecast. And as we noted in the looking at the software, it was showing a nice run up, bull run next year for the stock. However, we can see over the next couple of months going into Q1 of next year, it's showing a decline. And we can see here starting back in April of 2021, this stock has been declining quite a bit. And it's not until next year, probably about the Q2 time period, it's starting to show that run up and gaining all those losses. Now, I know looking at this graph, it's showing quite a bit of a run up next year, but if you look at their history back in 2019, in the October time period, it had a big run up. And same thing back in 2013, it had a nice run up after hitting some lows. So it's quite possible that this could pan out next year with this run up. And looking at the decline going into next year, it's showing hitting that $10 a share range where I would actually consider buying into it, especially if it goes under $10. So if this does pan out the way it's shown, I can see myself buying in sometime next year if this stock keeps going down. But let's move over to the random forest and we'll take a look at that graph and then we will take the average of the two. Looking at the random forest method, we can see over the next 52 weeks, pretty flat, a slight gain out in September of next year, up about 3%. So not a lot of movement in this method, but let's move on and look at the average. Here we are looking at the graph for the average of those two methods, and seeing here, it doesn't show that continued drop in the stock price like we did with the M5 rule. So it's showing a little bit of a drop going out into early next year, maybe getting down to about $11 a share, not quite at that $10 or below, and then picking up out in Q2 and closing out 52 weeks at about a 20% gain. To summarize the computer modeling, there are two opposing predictions for the stock price future performance. The M5 rule method anticipates a continued decline until Q1 of 2024, followed by a rapid rebound, projecting a 50% increase from today's level. Conversely, the random forest method foresees a relatively flat outlook with a modest 3% gain looking out into September of 2024. And taking the average of those two methods, the stock is still expected to have a gain of approximately 20%, looking out 52 weeks into that September time period of next year. It's worth noting when we performed the stock valuation earlier, we were presented with positive indicators such as a decade long of share decline, consistent growth in dividends, a robust return on equity and profit margins. While there were concerns as well, like a decline in free cash flow, inconsistent growth with net income and earnings per share, and a relatively high long term debt to free cash flow. And also to mention increased competition from companies like Square and such. But I will be monitoring this stock and its performance over the coming quarters, especially if there's some positive trends that I start seeing more of, and hopefully a future price drop in the stock. And I could see myself taking a potential investment into Western Union. And I appreciate your interest and hope you find the information valuable. And if you like to stay updated for future valuations and predictions, consider subscribing. And I hope to see you next time.